Tushar Pradhan, CIO at HSBC Global Asset Management India, is now joining us. Tushar, thank you so much for taking out time for us. Could you just tell us about the demonetization impact, and now that it is behind us, what do you think markets will wait for?
See, many people seem to think that the demonetization is either good or bad. But my sense is that if you look at it, there are things which are going to actually be beneficial, and there are things which will not revert to normal for a long period of time. So it's very easy to kind of say whether, or ask the question that, what's likely to happen. But I think it will be more of a wait and watch. And we will see a chronology of, these impacts starting to move, most of which will be very visible once the earnings season for the end of the financial year will come through. So by April of next year, we will get to see the impact on listed companies and the profits. As we go through the next year, we will also start to get a sense of how that has turned the way and the manner in which business works in India. And then in FY18 will be the critical earnings number to look at to see that, has that really altered the fundamental nature of, the Indian economy in any way. My guess is that it is not going to be that dramatic. I think it will be business as usual, whether you call it 6 or 8 months down the line. But I think there will be ways that the business will find itself going back to normal.
Do you think fund managers like you who run money would get a lot of opportunities after Q3, Q4 results? As you said, that a lot of businesses may tend to do very well, and a lot of businesses may, see a lot of changes in their business model?
Again, as I said, I don't want to make it a very extreme case that, certain beneficiaries and certain losses are very normal. I think it will be a little bit of a mixed picture. And just to give you an example, I think while the banking system has greatly benefited by this huge amount of liquidity coming through as deposits, and then the liquidity staying in the system leading to lower interest rates is a very, very interesting outcome. And that has led to a lot of stability in the banking system itself. So one cannot argue that it's not been good for them. On the other hand, is it that it is an unprecedented or a huge windfall for them? No, that's not the case either. So I think it is necessary to move away from the opposites to say that has this caused this sector to do very well and this sector to do very badly. I think each of the sectors will find certain parts of their business getting affected. So if you look at the NBFCs, for example, there has been some disruption in their lending, because most of the people who lent, like say MFIs, for example, they had an issue in terms of loan growth, and that starts to work back. But lower interest rates by themselves are very attractive to people to borrow money. So in a sense, it's not really that stark. And there are, of course, certain businesses which do directly get affected because, lack of cash in the system. But as long as the cash recharge starts to come back in the next few months, even that will start getting erased. So I think on the whole, I'm not, thinking that there will be large beneficiaries and losses.
Do you think that with the uncertainties that you just spoke about, risk premium for the country would increase?
Yes, I think generally the valuations for India versus an emerging market basket were always at a premium. And that was because of the higher ROE that most of the Indian companies used to deliver. I think if you find a wobble in the earnings, then the ROE may come down. We have seen that the valuations of emerging markets starting to dip a little bit in the last month or so, and Indian valuations have also come off. At the moment, there is no significant opportunity in India versus the rest of the emerging markets. I think it's moving in tandem with it. So I wouldn't say that it is particularly bad and it will actually increase the risk for India. I think global risks are also in the form of what the US does and how the emerging markets reacts to it. China, for example, is extremely wary of what's likely to happen in the US as well. So I don't think at this moment, because of this, that we suddenly become a lot more riskier than the rest of the emerging markets basket.
Do you think big tax cuts into US or dollar index rising or Fed increasing interest rates are big risk for flows in 2017?
Well, I think that's a very easy conclusion to come to, is that the US dollar will spike up because of the rise in interest rates likely to happen in the US. And because the dollar comes very strong, the rest of the emerging markets currencies fall. But I think between that, one has to realize that that may not be the case. Higher interest rates, especially when they start going up after a very sharp and a long-term decline in interest rates over long periods of time in the US, have shown that equities have not reacted negatively to it. In fact, return to some sort of growth, real growth back in the economy, actually despite higher interest rates, have led to higher equity prices in the US in the past. So again, there is no easy conclusion to come to on that event as well. And if the US markets continue to do well, then obviously the asset allocators, which largely sit in the US, also get more confident, and there is more allocatable resources for emerging markets. So in a sense, I don't think emerging markets will be that much of a casualty for very sharp increase in interest rates in the US, which, by the way, also we don't believe that's likely to happen. The interest rate cycle in the US is likely to very gradually go up. So in that case, again, I don't feel that, again, it's going to be a very dramatic change for the world scenario.
As far as FII flows are concerned, they have been negative. Do you expect it to be negative or very volatile?
That again is left to the asset allocators as they look at the world going forward. I think there is a sharp pullback from emerging markets, but if you have noticed, every year there has been a reversal of the previous year. So if you saw a very large inflow into emerging markets, it has not sustained beyond a year or a year and a half. And on the other hand, if there is a sharp pullback on assets, it has not sustained enough to kind of continue to keep taking money off the table. I would then think that if there is a reversion to the mean, then probably by the middle of the next year, and once the confidence returns and some sort of stability comes back in the US economy, some sort of, I would say, predictability comes back in terms of what trade policy it will have, then I would think that the emerging markets will be net beneficiaries of flows back in the next year.
Do you think SBI cutting rates so sharply, or rates in the system coming down so sharply, will mean that growth would come with a lag effect?
Well, again, it depends on the range of the stimulus. By itself, monetary stimulus, as we've seen globally, has not been very effective. This kind of stimulus has to be stepped up with some sort of fiscal incentive as well. So I would think that it depends on the surrounding factors more than just the rate cut.
Already a small stimulus has come in, but do you expect the budget to give some stimulus?
If you look at what is available to the government as of now, I think it is very clear that lower subsidies and especially lower cost of oil has given a lot of benefit to the fiscal mathematics. And it has opportunities to kind of deploy that in very meaningful ways in infrastructure and a lot of public spending that can come. So I would think that there is the arsenal to do something there. Now we just have to wait and see whether that actually gets spent.
We heard the management of IndusInd Bank a couple of days back after the sidelines of their results, and they said that such demonetization would lead to a lot of opportunities in the mid and the medium scale businesses which were not banked earlier, but now they would come in the banking system. Do you see that as a big opportunity for private banks, which means that their valuations would sustain?
As I said, the opportunity is always there. It depends on what part of the market does anyone target at any point of time. And in a sense, I feel that while it is not very uniform, the opportunity is not very uniform, it depends on the banking entity or the financing entity to identify where these opportunities are. So if you look at what was happening with the public sector banks for a large amount of time, very large projects got stuck in a lot of red tape, and that led to very significant losses on these assets coming up. Is that likely to change overnight? No, I don't think so. But if you have incremental assets to lend, I think the economy is getting a lot more cleaner. There are very clear signs of growth in certain parts of the economy. So it depends on your ability to recharge. It depends on your ability to kind of take back what you have lost in the last few years. Whether you raise more capital or more capital is becoming available through profits that you generate by selling government securities at a profit. Whichever way you look at it, I think it's up to the banks to take this opportunity. That opportunity is not uniform. If you just sit there, it won't come by your way. I think it depends on each of the managements to really take advantage.
Right. Always a debate between the private and the PSU banking space. What do you like more?
Well, private capex is not likely to come back in a hurry. I think we will have to wait a little bit more for certainty to come in, for investors to kind of think deploying capital makes sense from here on. So I would still think that that is still some time away.
Right. IT companies will declare their numbers soon. Do you believe that valuations are factoring in the worst for IT?
Well, there has been some change in the way business is done in the IT sector, but not very, very dramatic. I think the basic premise for Indian IT companies providing, very high-skilled labor to the US, I think that proposition continues to remain attractive. The US, if it starts to grow pretty strongly from here on, then I think the demand for IT services and discretionary IT spend will sustain. Valuations in IT companies have come off compared to their historical valuation metrics. So in a sense, again, if you put these two things together, it clearly looks like an opportunity to me.
Right. Do you think Pharma can do well in 2017?
Well, Pharma is a little bit of a question mark because it's not really just the fundamentals we talk about. It is really also more to do with how they deal with the US FDA. What are the likelihood of follow-up of these questions that some of these companies have been asked, how they deal with it, and how they quickly turn around the situation. Valuations have corrected across the sector. However, there has been some sharp pullback and a very smart rally in some of these companies again. And it remains to be seen whether they come back to their earlier valuations. But the fact again remains, just like IT, I think their business is in a good place. The demand is very strong for generic formulations to be sold in the US and in Europe. And if they kind of come out of this regulatory overhang, I think it might be again a return to pretty significant growth in the next few years.
Do you think pharma valuations are demanding considering the uncertainty around the US market?
Yeah, in the sense that you have to look at valuations in a relative basis. It is not the absolute valuation we talked about. So in the past, pharma valuations have remained pretty expensive. So in that sense, the correction is really relative to how expensive they were. The argument is whether they will sustain those kind of valuations going forward. In my opinion, I think even if you get a very sharp correction, that might be just a right time to get back in.
Are you surprised by the move in the metal sector in 2016, the sort of returns some of these companies have given?
Well, I think it is a logical outcome of the fact that prices globally started to inch up for most commodities, and the fact that the Indian currency also depreciated around 2% for the year. So if you add the percentage increase in global prices for metals and the depreciation, suddenly you had all of these companies making a lot of margins growth just on the basis of these two moments. So there was nothing fundamentally that they did differently this year. It's just the fact that the price got adjusted upwards. Interest rates came down dramatically, as well as the fact that the rupee, of course, also was in favor of these companies. So as a result, I think it was just an outcome of what happened largely on these two counts.
Despite the up move, would you be overweight in metals on 2017?
Well, as I said, there's been a very large amount of money being made in these sectors. And if you think that the metal prices are going to continue going up from here, then there is the only case to be made that they will sustain valuations. But apart from that, it is just going to be not really as hot as it was. It's always difficult to chase a sector which has done so well.
Let's talk about mutual fund flows, and it's been very, very strong so far, despite returns not being that great. Do you expect it to continue the way it is?
Well, I think it is probably something to do with the opportunity cost of capital. Most of the savings of Indians used to go either in gold or real estate. But here we see that there is a chance that people realize that there may not be too much of an upside in real estate from here on, and they may have just reallocated their resources into financial assets, and mutual funds might be just one of those recipients.
And do you believe that overall flows in the mid-cap space, in the overall retail space, from the retail space, would be strong?
Yeah, as of now, what we've seen is the anecdotal evidence is that there has been a significant improvement in domestic flows. However, foreigners continue to remain pretty much anemic. There's not been incremental flow into this country for the last 2 or 3 months. And I think since the start of the year also has been negative. So it just remains where it is.
Just a last word before we conclude. Outlook for 2017, do you think it will be a year of positive returns?
I think so, clearly, because the earnings growth rate is estimated to be much higher than what was there in FY17. So FY18 is likely to be a significantly positive earnings year, and stock markets are basically slaves to earnings. So I would think it's positive.
Right, Mr. Pradhan, thank you so much for taking out time for us. Always pleasure.